The company and/or guest has contributed to the costs associated with producing this episode of Shares for Beginners.
Phil Muscatello and Finpods are authorised reps of Money Sherpa. The information in this podcast is general in nature and doesn't take into account your personal situation.
G'day and welcome to our Shares for Beginners CEO Fireside Chat. Today I'm welcoming Steven Boland, Managing Director and CEO of Acrow Limited, ASX code ACF. Acrow is a leading Australian provider of smart integrated construction systems specialising in formwork, industrial services and commercial scaffolding. Since joining Acrow in 2013, Steve has driven the company's transformation, shifting its strategic focus towards engineered solutions and establishing Acrow as the number one player in formwork, supplying many of Australia's marquee infrastructure projects. Steve has led Acrow to impressive revenue, profit and return on equity growth. Prior to Acrow, Stephen held senior roles including Group General Manager at Veolia and Global Executive Director at Visy Industries. Hello, Steve.
Afternoon, Phil. Great to talk to you.
Yeah, thanks very much. Great to have you back on the podcast.
Good.
So tell us about the Acrow story for listeners who might not be familiar with the company.
The Acrow name has been sort of synonymous with the construction industry, not just in Australia but internationally for almost 80 or 90 years now. The business in Australia was part of Boral Formwork and Scaffolding for a number of years. Got sold into private equity about 15 years ago. I started 12 years ago as the CEO, as part of that sort of private equity journey. Typical turnaround. The business wasn't in great shape. Just had to get it into a position where it was an asset that could be sold and move forward. And I think fortunately, really, when we look at it now, the departure from private equity was not a sale to another company; it was actually listing, so we went into life as a public company 7 years ago, with no debt, with about an $80 million revenue business and was making about $10 million of EBITDA. It had been primarily focused in commercial scaffold, which isn't a great part of the industry. It's a bit of a race to the bottom on price and not a lot of differentiation in terms of service or smarts or engineering expertise. We did have a formwork presence primarily in Queensland that was quite strong, and we wanted to pivot our business towards that. Needed some investment, but the capability that we already knew we had off the back of the Queensland business, take that across the country. And I think that was the first thing that we did that changed the dynamic of the business around about 7 years ago. So in the early stages, first couple of years after listing, we made two strategic acquisitions in the formwork space. One of a business called Matform that was a screens provider. They're one of the largest screens provider for construction, commercial and residential high-rise construction in Australia. And then we bought a business called Unispan that was a reasonable sized formwork company in Queensland that also had a smaller industrial access business. I mean, those two acquisitions really was the sort of the catalyst for growth. So first couple of years after we listed, we had reasonable sort of growth, more focus on formwork, but we got to sort of $15 to $20 million of EBITDA. And then in a couple of years after that, we really kicked off as we exported those two acquisitions and took the business with a sort of a national formwork profile. When we first listed, we would have been a quite distant number 4 in terms of the market share for hirers and sellers of formwork equipment in the country. Today, we're quite a long way number 1. We'd be our yearly revenue in this space would be, I think, more than the other 3 major competitors combined. So we've really taken the opportunity to grow the business off the back of those acquisitions and using the smarts that we already had from our existing Queensland business. So we've now got a great product suite. We've got a national business with business with a national footprint, ability to move gear around as we want to take opportunities that present themselves, doing a lot more highly engineered work. I think that's been the major change. We also, when we listed, had about 13 engineers working in the company. Today we've got in the 50s. Today we are very much a specialised engineering company for temporary works. I think the next thing too then is the pivot over the last few years into the industrial access business in a big way. So this has been the story of Acrow probably for the last couple of years. Formwork well established now, and then we've made 4 acquisitions now in the industrial access space in the last just under 2 years. as well as growing what was the existing business that had come out of Unispan organically. And now we've entered the market in Western Australia off the back of a contract at the Perdaman urea plant as well. So that business has gone from sort of a $15 to $20 million turnover business. Next year, that business will do more than $200 million in revenue. So it is actually now the largest part of the business in terms of revenue. So that's been the big, if you like, there's been two very significant pivots in the business, one heavily into formwork, and whilst we still love that business and we're treating it with the same tender love and care as we always have, but now this pivot into industrial access that, has very, very big market nationally. And, we've got aspirations to do similar things in that market that we've done in formwork.
So, Steve, can you explain what industrial access is for listeners who mightn't be aware about how this works in the building industry?
So this is actually not the building industry for industrial access. It's more it's industrial. It's power stations, mining, coal loading facilities. There's a whole range of different anything that's more not so much. We're not working on buildings. We're not working on 20, 30 story buildings being built. We're working in the industrial space, and we provide the access for plant and equipment to be maintained. So I'll give you the example. One of the good examples is the Visy Pulp and Paper Mill in Tumut, where once a year they shut down that facility for 6 weeks to do a complete maintenance overhaul of the plant and equipment there. We provide the access equipment, which is scaffolding equipment, but we provide the scaffolding equipment for them to be able to do the maintenance across the whole of their plant. Now, we don't do the maintenance. We don't provide electricians or, et cetera, et cetera. We provide the access. And we do that now across a whole range of different styles of projects across the country. Everything from the BHP coal loaders facilities in Hay Point in Mackay to the Visy Pulp and Paper Mill to the Perdaman urea plant now in Karratha, the Snowy Hydro project. There's a whole range of those industrial style projects where we provide the access for the work to be carried out.
Let's just step back for a moment, just for people like me who are not in the building trades. Now,
Sure.
formwork is like when you see a slab being poured, there's all that metal which
Yes.
holds it together, isn't it?
Correct.
Yeah.
It's the cake in effectively. So, if you think of any application where there is concrete being poured from, as you said, so sort of a fairly basic application would be, say, a multi-level car park. A big slab at a multi-level car park, everything to some of the most complex infrastructure projects in the country, tunnels inside, the Melbourne Metro Rail project, the Sydney Rail projects, the Brisbane Cross River Rail project. So you have very complex work inside tunnels, a lot of bridge work on major, again, civil infrastructure projects. So you go from what's very, very basic, just supporting the laying of a slab, to supporting the walls of underground rail networks, which are very complex engineering projects.
You mentioned the number of engineers that you employ and how many it's increased by. Is that because of the complexity of the projects that you're involved with? That it does actually require serious engineering capability to be able for the company to deliver?
It's both the complexity of the projects and just the general reach of the business as well. So I think it's both of those things. So firstly, definitely, we didn't have probably the capability to now undertake the style of formwork projects that we kind of mentioned, these rail tunneling projects, for example. We didn't have the capability probably 7 years ago, both with gear or engineering smarts. So there's been an element of that, but it's just also the scale. So we've gone from a business that was turning over in the formwork space, maybe $30 million, to now like $130 million. So, and it's not just a Queensland-centric thing now. It's a national business that has required us to have that same sort of level of engineering expertise across the country.
So when was Acrow listed on the ASX?
Yeah, so it was April 2018. April Fool's Day 2018. Yeah.
But it's obviously worked out okay, hasn't it?
It's worked out okay. It wasn't really an April Fool's joke. Yeah.
So what are some of the key projects that Acrow has or is currently working on?
Well, from a formwork perspective, there wouldn't be a major civil infrastructure project in the country that we've not had a significant presence on over the last 5 years. For example, in Melbourne, The two big projects in Melbourne that are just coming to a conclusion are the Westgate Freeway and Tunnel project and the Cross Yarra passages. So the CYP Underground Rail Network for Melbourne. Now we've been the primary formwork seller and hirer to both of those projects for pretty much the duration of their tenure. We're now moving on to the Northeast Link, which is the next major motorway project in Victoria. We're doing some significant work, and we're just concluding that work on the Cross River Rail project in Brisbane. We did a lot of work on the Bruce Highway extension that went through sort of Gympie and that region. We're working on the Coomera Connector project at the moment. And then in New South Wales, we're on, a big one at the moment for both industrial access and formwork is the Snowy Hydro project. So if you thought about any major civil infrastructure project in the country over the last 5 years, we've had a significant presence on every one of those projects in terms of hiring formwork equipment and also selling formwork equipment.
I've also noticed that in some research that I was doing about the company is that there hasn't been any work done on Badgerys Creek Airport as yet. Is that the case? Am I getting
No,
wrong?
we didn't do a lot of work at the airport, but right now we've got two significant packages of work being done on Metro West rail stations servicing the airport. So the Aerotropolis, which is the station at the airport, we've got a very large package of work on that right at the moment. We didn't do a lot of work on the actual airport terminal itself. There was a specific form worker in Sydney who won that project who got all their own gear. So didn't really need to hire gear from anyone particularly. But we are doing the rail, the station boxes on two large parts of that Metro West that's servicing the airport at the moment.
More recently, you've taken a strategic decision to aggressively grow your industrial access business, which I believe is now the largest divisional contributor to group revenues. How did you first enter this business, and what are the market dynamics that have attracted you to this business?
So it came about when we bought that Unispan business in Queensland about 5.5 years ago. And we primarily thought we were buying a formwork business, and we were. But they had about $8 million of their revenue in this industrial access space. They had a few contracts, which we've still got today, one with Origin Energy in the Surat Basin, where they provide access for maintenance of the plant and equipment on that site. We've got a very, very good manager in that business. And over time, we've had the confidence to invest more in equipment, support the growth of that business, the existing, if you like, Acrow organic business in that area. But then over the last just under 2 years, we've made 4 acquisitions in this space. We bought a business called MI Scaffold based in Mackay in the Bowen Basin in November of 23. We then bought a business called Benchmark, which is based in Townsville in March of 24. And just last month, on the 1st of May, we bought a business called Brand Industrial based in the Hunter Valley and Above Scaffold based in the Sydney metropolitan area. So we've grown off the back of those acquisitions, but also significant growth organically. So Snowy Hydro is one of our biggest industrial access contracts. We've got an industrial access contract now in Western Australia, Karratha. Now, we had no operation for the industrial business in Western Australia. And in January, we started at the Purdom and urea site. That's about a $45 million contract over a couple of year period. We have to mobilise about 100 men for that job, which we're doing. It's up going sort of gangbusters at the moment. So we've been able to buy. Well, we've had the existing Acrow business that we grew off the back of Unispan. We've made the 4 acquisitions. We've won some large contracts, as I said, in WA. Pull that together now, and we've got a very large presence in this industry. And I think it's important, for potential shareholders or existing shareholders to understand the market dynamic here. We're not doing anything except providing access. We're not interested in being the trade provider. So we provide the access for the trade work to happen. I'll give you an example in this area. So there's actually 3 elements to this. There are long-term maintenance contracts where you basically have your staff there every day. So one of the largest in that category for us is the BMA coal loading facilities at Hay Point, just outside of Mackay, where we've just renewed a 5-year contract there. So we've got men there every day providing scaffold access. Then you've got construction style projects like Snowy. It's got a long-term construction style project, but it is a construction project. We've got another one at the Ampol oil refinery in Lytton in Brisbane, right, where we're providing access as that plant is being expanded. And then the third one is the shutdown work. So power stations, the busy paper mill, pulp mill down in Tumut, Once a year, they shut that facility down in September, October for 6 weeks. We provide all the access for that plant to be maintained over that period. So, you've got ongoing maintenance contracts, you've got construction style contracts, and then you've got the shutdown projects. Power stations is a particular expertise of ours. So, we can mobilise men and equipment for a very short period of time in a big way. We just did one at Mount Piper Power Station in New South Wales, where I think we provided around about 120 men and just over 1,500 tonne of equipment for only a 6-week period. Get the job done, out. So it's got a similar-ish dynamic to Formwork in that it's not a price-driven market. Formwork, again, is not a price-driven market. The old commercial scaffold business absolutely is. It's a commodity business. There's 100 companies can do what we could do in just about every capital city, so we choose not to play in that space anymore. We choose to play in the more specialised areas. So, you're dealing talked about, you're dealing with BHP and Visy and, all the big power suppliers and the Snowy Hydro project. I mean, these are some of the biggest sort of utility style projects in the country. So, safety and engineering smarts are sort of really important for those projects rather than a race to the bottom on price. So, we've got ourselves a very good situation in this access market. We're specialising. We're not going to try and be all things to all people. Our margins are very good. Our margins, there are a couple of other public companies that play in and around this space. And if you look at our sort of sales margins, if you like, or gross margins, they are significantly better than most of the other public companies that play in this space who probably provide a more broader service offering with other things other than just access. And we've got real ambitions for this particular area to keep growing it aggressively. It's probably got more scope for growth on a longer term basis than Formwork, because it's a far bigger market. It's probably a few $1 billion, market in Australia, where the Formwork hire and sales market might only be $400 or $500 million, right? So yeah, we like the way it's developing. It complements nicely. I mean, our Formwork business has really high margins, but you do have to go contract to contract and keep winning work. And then you've got this other business got a far more stable earnings profile, probably less capital intensive, but still really good margins, but not the same margin profile as the Formwork business.
Sharesight is the portfolio tracking and reporting tool that takes the hassle out of managing your investments. Here's how it works. Import your trading history with just a few clicks, either from your broker, from a spreadsheet, or manually. Sharesight organises all your investments in one place, no matter where the assets live, so that you can track your total performance. Go to the link in the description below and get 4 months free with the Shares for Beginners exclusive offer. Market prices, currency movements and corporate actions such as dividends and share splits are automatically recorded going back up to 20 years and ongoing to keep your portfolio up to date. Simply email your trade confirmations to Sharesight, or better still, get your broker to do it. Sharesight automatically updates trades in your portfolio, so there's no data entry required. Sharesight gives you a 360-degree view of your portfolio, with capital gains, dividends and currency fluctuations. I'm flummoxed as to how I ever managed my portfolio before Sharesight. It's easy to compare individual investments, identify non-performers and get an accurate picture of your total return. Believe me, it's changed my investing forever. And Sharesight's detailed tax reports makes your accountant's job easy. And we know that a happy accountant is a happy accountant, although you'll be saving hundreds or even thousands of dollars in fees, so maybe they won't be so happy. You can access Sharesight from anywhere, and because it's protected by bank-level security, you can get peace of mind knowing your data is always backed up and secure. So throw that spreadsheet away and get started now. Go to the link in the description below and get 4 months free with the Shares for Beginners exclusive offer. Okay, so looking into the future, where do you still see growth opportunities in industrial access, and how large are these opportunities?
Yeah, look, I think that there's a few things. Well, number one is there's more M&A opportunities for us. There's lots of, 20 to sort of $30, $40 million businesses in this space that, we made a couple of acquisitions of that size recently, of business of that kind of turnover. I think there's more of those opportunities for us in some of the existing markets that we operate in. There's new geographies, I guess, for us to open up. We're not in South Australia at the moment. There's opportunities in the Olympic Dam we're quite interested in. Western Australia, we've only just started. Western Australia is probably the biggest, obviously, industrial market in the country. And we've got one contract there at the moment, but it's a big contract and gives us an opportunity to springboard off the back of that. So I think it's really there's still M&A, and there's quite a lot of M&A opportunities. Then there's organic growth opportunities within the markets we play in, and then there's opening up South Australia and Western Australia. So I think, we still can grow this business significantly. It's a couple of $1 billion market, as I said earlier, and, we're call it 200 to 250 probably leading, heading towards that in our existing business. There's no reason why we can't double the revenue at the same kind of profit margins in the industrial business over the next 2 or 3 years.
Can you walk us through your approach to mergers and acquisition and how you ensure these deals create value for shareholders?
Yeah, look, we're very disciplined in this area, and we have been so from day one. When we've made 6 acquisitions now since we listed. They've all been around that 4x EBITDA, trailing EBITDA multiple. Sometimes a little bit less than that actually. And every business that we buy, we've improved since we bought it. And even the 2 businesses we just bought on the 1st of May, Brand, Industrial, and Above Scaffolding, I can already see how those businesses are going to significantly improve their profitability just by the opportunities that would be presented by our reach. Right. So, we need to maintain that discipline. Now, we've turned businesses away that want, like a 6 or 7 time multiple on their EBITDA, and we're just not interested. So I think it's a good thing for us to be able to say to anybody who approaches us with a business for sale, go and have a look at the deals we've done. We're a public company. It's all public. You can see it. If you like that structure, talk to us. If you don't like that structure, don't bother. We're quite, black and white about that. And then, as I said, we also wouldn't buy a business that we thought we'll just keep the same as it already is. We didn't see the opportunity to develop either further revenue streams or get some cost synergies, or in some cases both. So we stick and also they've got to be in our it's particularly our knitting in our area that we it's got to be in industrial access or formwork equipment. We again get approached for things that slightly differ outside of those specific service offerings, and we just don't want to do that. So I think, that's our record in that area we're pretty proud of, and we stick to our guns in terms of multiples and that we pay off, and also in terms of the types of businesses. I think the other thing to mention too on that just is that, we won't buy a business even if the numbers look good and it's in an area we like, if we think culturally it's not going to work. So we've had a couple of opportunities where we've walked away because the culture is just not going to fit in with Acrow. So it's not just we're buying businesses for the sake of the numbers. If it doesn't look like it's going to add value in terms of or be compatible with our culture, then we wouldn't do it.
That's an interesting approach, isn't it? That you would take a qualitative approach as well as a quantitative approach in these kind of things. How important is that?
Oh, it's just as important. I think there's no point in, you might get a great deal, but then you're going to have all sorts of operational and management issues trying to integrate a business where you're just not culturally aligned. So, I think, that's just as important as the numbers.
So between mergers and acquisition and new product opportunities, how are you evaluating the growth in capital expenditure to make sure that value remains created?
Yeah, look, we've been pretty capital aggressive in the last few years, even outside of sort of the M&A area. We've spent a lot of effort. See, we've now got a very big internal product development program. Okay, and especially in the formwork area, we've developed a particularly new system for jump forms. Now, jump forms are an area of the formwork market that we didn't participate in. We've only started the last couple of years. It's effectively the form support for the lift shaft or the core of any high-rise construction. So think about a high-rise building, think about the stairwell and the lift shaft. That's the core of the building. And the jump form effectively goes up with the building as it's going floor to floor to floor to provide the support for the concrete being poured. Now, that's a very highly engineered part of the formwork industry. So we're spending at the moment around about sort of between $10 and $15 million a year on that sort of that gear to get us a critical mass. We're probably 12 months away from having the critical mass we think is right. And at that stage, we'll have a business that we probably would have invested sort of probably in the vicinity of $45 to $50 million on. That's going to be making us $18 million a year. right? So and then we're away. And then we're away in terms of what we think is the available market share. So I think, we're not spending a lot of money in capital at the moment on the core formwork products. It's more in these growth areas when we're taking the opportunity to grow in other areas that are developing new, fresh revenue streams for us. I mean, that's a very critical part of what we've been doing over the last few years, is giving us a lot of strings to our bow. So we're not just a one-trick shop. We're not just purely a formwork civil infrastructure player. We've now got a range of other profit-generating parts of the business, including industrial access and some of these more specialised formwork products like jump forms and like protective screens. So it's really been part of the strategy, just to give us a lot more breadth across our profit range.
Are there any more in-house products that you've been developing that you wanted to add on to here?
Well, we've just developed a product for the industrial access business called Uni-Ring. So it's a specific type of scaffold product that we've only just now got brought to the market. Its first utilisation is on this Perdaman project in Karaha that we're working on. So we've got a dedicated product development team of 4 people, and they're looking at things all the time. They're looking at everything from very small little add-on products to quite, like the Uni-Ring product we've brought in, and also the jump form product we've brought in. That's quite a large-scale project. I mean, we think it's, we're the only Australian formwork and industrial access business that is actually designing and bringing to market our own equipment. All of our other competitors in this space are either subsidiaries of internationally owned businesses, or they are Australian businesses who just buy gear from overseas suppliers. I don't think anyone else is actually designing their gear the way we are. So, I mean, look, we've got a very good engineering team. We've got some really good people in product development. But I guess we view ourselves as the Australian formwork company and the Australian industrial access company who are developing equipment for the Australian market.
So far you've delivered strong growth in revenue, profit and return on equity over the last 5 years. What have been the main drivers of this performance?
Like, from a competitive advantage perspective, number one, I always say it's our engineering capability. So we've developed a very strong engineering capability over the last 5 years. Number two is the breadth of equipment that we've got. So we've got a great range of products across both formwork and now industrial access. We operate nationally, so we've got a branch network that gives us the capability of moving equipment amongst states and taking opportunities in markets as they grow. And then it's just the general capability within the Acrow staffing. I mean, I've said many times I've never worked with a better group of middle to senior managers over 30 years and being involved in business as I am in Acrow at the moment. We've now got a very clear vision of what we think is the Acrow way of operating. And that's really, we're spending a lot of time and effort at the moment on, let's say, what we're calling the Acrow way. So a lot of that's to do with, bringing in cadet engineers. So bringing in young, guys and girls that are, halfway through their engineering degrees. They get qualified, they stay with us, and they're taught the way we want them to operate. We're doing the same thing now, and it's going to be start to be done in quite a large way in the industrial access business, where we've recently bought a training business called ATEC, who operate in Brisbane. We're also establishing a training facility in Mackay. So the idea there, if you imagine, access to labour is still a very big challenge for those sorts of businesses. We want to breed our own. So we want to train and breed our own scaffolders. We want to offer these guys guys and girls a career that they can basically leave high school or leave TAFE colleges or whatever and have a career in this area. You can earn a very good career for yourself out of working in some of the high level industrial access jobs that we do. So again, training people the way we want them to work is very much now part of the thinking of the business going forward. So, internally we talk about this is the Acrow way of how we operate.
There's plenty of challenges, isn't it, apart from supply of labour as well? The supply chain issues, economic cycles. What are the key risks that you're facing at the moment and how are you mitigating them?
Look, I think it's in the formwork area more than the industrial area. So we took when we changed to basically designing our own products overall and having direct relationships with people that manufactured to our design, that took away a lot of the supply chain challenges. It took away a lot of the cost challenges that we had with, just sourcing material from other overseas companies. So we've taken control of that, and that's mitigated that risk to a large degree. I think the formwork industry, you do have to go project to project. So you are I've always said I don't believe in cycles, but ultimately there is a cycle. Queensland right now, I'll give you an example, right? So Queensland's been our biggest formwork business for years, and we've probably got 60 to 70% market share there. The results out of Queensland at the moment are probably the lowest they've been for about 2 or 3 years. Now, there's a whole range of reasons for that. Government funding and delays in projects like the Queensland Hospitals projects getting underway, nothing happening yet with the Olympic Games. Just planning, but nothing, no contracts being let. So Queensland's actually at a very low level. Now, I was up there last week. I know, and this is not guesswork, I know within the next 12 to 18 months, we're going to go for a relatively low level to revenue opportunities like we've never seen the like of before. Once all that Olympic stuff starts kicking in, and not just the venues, all the associated infrastructure required to make, it's not just Brisbane, either the whole state of Queensland Olympic ready, it's going to be massive amount of work. Now, we're in a box seat to capitalise on that, and we will capitalise on that. So, whatever results we're doing at the moment, we're thinking around, one of the challenges is for us in the next 12 to 18 months is have we got enough equipment and manpower to be able to capitalise on the opportunity that whole Olympic cycle of probably 5 years is going to generate for our Queensland business. So, we know what's ahead of us there. So it's going to be quite a dramatic increase. I lived through the Sydney Olympic Games cycle. I was in a different industry, but one that was still, it was in the waste game, and the waste business had an opportunity to grow up. Well, I never saw work like it in the 3 years leading up to the Sydney Olympics, and I've got no reason to think Brisbane will be any different. In fact, I think Brisbane's probably a bit further behind, really. So we're going to go from a relatively flat spot at the moment in terms of our Queensland business to probably off the chart in the next 18 months to 2 years.
Yeah, it's because, as you say, it's not just the venues, is it? I know there's new rail infrastructure that's going to be all over the place.
Hotels, you've got a massive gap in the ability in the sort of bed capacity within Brisbane. And again, it's not just Brisbane. There's a village being built, the Olympic Village in Brisbane. There's another Olympic Village being built on the Gold Coast. There's another Olympic Village being built in Rockhampton. There's another Olympic Village being built on the Sunshine Coast, because they're hosting events in all those different centres. There's a massive, and then you think about the road infrastructure that's got to service that, as you said, the sort of rail, etc., the public transport infrastructure. It's a massive amount of work, not just main stadiums and swimming pools and bike tracks. There's a huge amount of other infrastructure.
How do you kind of work is it kind of guesswork beforehand, knowing what's going to be going into place? Because some projects will be given the green light and others won't be. Do you just have to wait to hear what's
we've got to be right on it,
so to speak?
So we've got 3 of our guys in Brisbane who are effectively the Acrow Olympics committee, if you like, right? And they're right on it in terms of their job is to understand every single project and potential time frames for those projects to be let. So I was in Brisbane last week, and they gave me like a 10-page document of what they're seeing across the whole, and potential timeframes and what opportunities and what product mix and all the things that will give us a revenue growth opportunity. So we're taking the thing very seriously. I'm sure we're not the only company thinking like this. So we've got to be on our game, right? Because it's a once in generation opportunity, right? So you got to grab it, and we determine we're going to grab it. But look, I'm sure things will change. There's things in the plan today that may not happen. But one thing I will say, and I still say that Brisbane's, it's not running out of time, but it better get their skates on, right? Because you've got to have these venues cherry ripe, at least probably 2 years out before the Olympics start, running test events and etc. I remember the same thing happened in Sydney. The first event at the Sydney Olympic Stadium I went to was in the February of 1999. The Olympics were in September of 2000. Right, so you've got to have those things ready to go well in advance of the actual event.
So just before we sign off, can you run us through some of the key numbers of the business that might be of interest to listeners of the podcast?
Yeah, look, we put guidance out for this year, so we're going to do circa $265 million of revenue this year, and sort of $80 million circa EBITDA. We know that's going to be significantly better next year. Partly we've got 2 acquisitions that have only kicked in on the 1st of May, so you have a full year impact of both of those. So we'll be significantly better than those numbers into the following year, and I think, we've now got weeks where we pay up to 1,000 people. 3 years ago that was like 200 or 300. So it's a much more, it's a lot of extra heads and mouths to feed. But look, I think, and we've purposely invested. So we're very conscious of like our debt to EBITDA. We don't believe now is the right time to be raising capital. We've still got a very good relationship. We've got an extremely good relationship with our bank. So they've, we still, we like to get back to around about a 1 turn of EBITDA sweet spot. We're probably, we're running sort of 1.5 plus at the moment because we've only just done 2 acquisitions that cost us, $25 million, and they're going to generate 2 months of revenue. So as we get into sort of this time next year, we think we're going to be back closer to like a 1 turn of EBITDA to debt, and a business that will have significantly more revenue than it's had in this 25 financial year, and significantly more EBITDA than it's had in this 25 financial year.
Fantastic, Steve. It's great to hear from the inside about companies that many listeners would never even heard of. So thank you very much for sharing that with us today, Steve, and good luck with the Olympics.
Yeah, thanks, Phil. Thank you very much for your time today.